Welcome back to the Pension Updation Deep Dive. I'm Priya Chakraborty and my co-host is Anil Agrawal. Today, we're looking at something specific, a recent circular from the All India Bank Employees Association, AIBEA.
But we're using it to unpack an almost 80-year history of achievements by AIBEA. It's really a masterclass in how you fight for something big, like Social Security, over decades.
Exactly. And that's our mission today. We're going to trace this long timeline, the demands, the setbacks, the compromises, the successes, using the dates and the actual mechanisms, like these tribunals and settlements you hear about.
It shows how huge gains like the pension scheme itself are actually won. It's a long game.
A very long game. And this circular, it's dated October 28th, 2025, marking the 32nd anniversary of a really key moment.
That's October 29th, 1993, the day the pension scheme for bank employees was finally agreed upon. A huge landmark.
But to really get why that was so huge, we have to rewind way back. Back to the conditions before this whole fight started. The circular calls it a nightmare.
Yeah. The 1940s, you have to picture it. Post-retirement life. Almost zero security. It wasn't just bad, it was precarious.
Totally precarious, hire and fire culture, with no job security.
No fair wage standards. Service conditions weren't regulated, and trade union rights were virtually non-existent. You were pretty much at the mercy of management.
And retirement benefits?
Well, you basically had the Provident Fund, the PFF. That was it.
And gratuity, which is that payment you get when you leave service, that often depended on, and I quote, the mercy of the management. Not exactly a reliable plan.
So, no steady income stream after you stopped working. And that's the context for AIBEA's founding, April 20th, 1946.
And their core demands right from the start.
Better wages, obviously, service conditions, and critically, a pension from day one.
But it wasn't a quick win, was it? That brings us to the next phase, like 46 up to 93. Decades of, well, trying and failing.
That's a good way to put it, decades of demand. The circular points out specific times it was raised and rejected.
Yeah, it mentions the Sen Tribunal, Sastry Tribunal, the Sai Tribunal.
Okay, these were set up to sort out big disputes about wages and conditions in banking, big-ticket matters.
Okay, so AIBEA goes to these official bodies, makes the case for pension.
And gets turned down repeatedly. It showed that the whole system, government and management, just wasn't ready for that kind of comprehensive pension scheme. The demand became a constant feature in various bipartite settlements.
BPS is the main negotiation process. It's between the unions, like AIBEA, and the Indian Banks Association, the IBA, which represents bank management.
And they happen every few years to decide wages, benefits, all that. So the fact that pension kept getting raised in BPS after BPS and kept failing, it just underscores how tough a nut this was to crack. A major financial commitment the banks weren't willing to make.
So decades went by hitting this brick wall. Then we get to the mid-80s and something shifts.
Yes, a really interesting strategic pivot. And the trigger wasn't actually internal to the banks.
It came from outside.
The government, following its fourth pay commission, significantly improved the pensions of central government employees. That became effective January 1st, 1986.
Okay, so the government sets a new standard for its people.
And AIBEA saw their chance. They adopted a new strategy.
They started demanding that same improved government pension, but in lieu of the existing Provident Fund, PF.
So swap PF for this better pension. They basically said, look, you've set the benchmark for your own employees. We want parity.
And why was this new scheme considered so much better? You mentioned PF was just a lump sum that doesn't grow with prices after you retire.
Yes, the key difference that made AIBEA dig in its heels was that the government scheme was DA-linked.
Right.
Dearness allowance, DA, is specifically designed to combat inflation. It's an extra amount paid to employees and pensioners to offset the rising cost of living.
So a DA-linked pension, its value keeps up with inflation.
Yes, your purchasing power doesn't erode over time. Plus, the scheme had other benefits, like being able to commute part of it into a lump sum and family pension provisions. It was a robust long-term safety net, much better than a PF lump sum that could run out or lose value.
That makes sense. A dynamic benefit versus a static one. But the circular says there was a lot of resistance and opposition to this idea, even among employees. That seems counterintuitive.
It does, but it happens. Change is hard. And there was apparently a negative campaign stirring up doubts.
What kind of doubts?
Mainly fear of the unknown. People understood the PF you get this chunk of money. The monthly DA-linked pension might have felt less tangible, less secure, even if it was objectively better long-term. Familiarity bias? Maybe.
Interesting. So internal skepticism alongside the external fight with management.
Definitely. And the source mentions that, initially, only AIBEA, the Officers Association, really backed AIBEA fully on this specific demand.
So not even full unity among the unions at first, but they pushed through.
Yes, AIBEA had great leadership and finally, October 29, 1993, victory. The pension scheme was achieved.
But that lack of initial unity and that negative campaign, it had consequences, right?
Yes, huge consequences. This is where the story takes another turn. Despite winning this hard-fought benefit, many employees didn't choose it.
Exactly. A surprising number of employees and officers actually opted to stay in the PF scheme. They didn't switch over.
All that effort, and people didn't take it up because of misinformation and negative campaign.
People who did opt for the pension started receiving it, and it was inflation-proofed thanks to the DA. Meanwhile, those still in the PF system started seeing their lump sums not stretching as far over time.
That was predictable. A massive miscalculation, fueled by that negative campaign as reality started to bite.
So, buyer's remorse set in, but in reverse. People regretted not taking the pension.
Yes, the demand flipped completely. Suddenly, the people who'd resisted the pension were clamoring for it.
So the fight shifted again. Now it was about getting a second chance for those who missed out.
Precisely. Winning the policy was just step one. Making sure everyone could actually benefit was step two.
And that took more negotiation.
And success finally came in 2010. It was secured during the 9th bipartite settlement.
Okay, 17 years after the initial scheme.
Yes, and this time it was achieved under the banner of UFBU, the United Forum of Bank Unions, a more unified front, with AIBEA playing a crucial role.
That second chance benefited over 300,000 employees, officers, and retirees.
That's over 300,000 people who got another shot at securing the better pension scheme.
That really highlights the persistence needed, not just winning, but fixing the rollout issues.
Absolutely. And that brings us into more recent times. The ongoing effort to modernize the benefits and deal with legacy issues for older retirees. It's continuous.
Like the fight for people who retired even before 2002, the DA issue again. Deja vu?
Exactly. This is a great example of fighting for fairness across generations. So in 2002, during the 8th BPS, unions achieved 100% DA neutralization for current pensioners.
Meaning retirees. Pensions kept pace with inflation from that point.
Right. But what about those who had already retired before November 2002? They weren't getting that full 100% DA benefit.
So an inequality was created based on retirement date.
Yes, and fixing that retrospectively had huge cost implications for the banks. So the unions fought for it.
That fight went all the way to the Supreme Court.
But the court actually rejected the claim, a major legal setback.
Wow, so end of the road?
You'd think so, but no. This is where union persistence really shines. Even after the Supreme Court loss, AIBEA and UFBU pressed harder.
They shifted focus back to negotiation, took the issue directly back to the IBA, kept pushing the fairness argument, and they finally succeeded. In October 2023, they reached an agreement with the IBA to extend that 100% DA benefit to the pre-November 2002 retirees. The unions won through negotiation what they lost in court.
Yes, it benefited around 180,000 pensioners, a huge win achieved by refusing to let the issue die.
And there have been other big improvements recently too, right? Especially for the oldest retirees.
Absolutely. Let's talk about the pre-1986 retirees. These are people who retired even before that government pension improvement we mentioned.
What was their situation like?
Their ex gratia pension, a goodwill payment, was very low,
350 rupees per month plus DA for the retiree.
and 50% Rs 175 plus DA for the surviving spouse. It was symbolic but not enough,
Almost insulting.
possibly. But now, thanks to efforts in the 11th and 12th bipartite settlements, there was a huge jump.
How huge?
The recent IBA advisory suggests moving to a flat Rs 10,000 per month for both the retiree or the surviving spouse.
From 350 to 10,000, that's life-changing.
Totally. It provides a measure of real dignity in old age that was absent. A quantum leap, not just a small bump.
And other things improved too. The 11th BPS also significantly improved family pension, making it a uniform 30% of the last drawn pay without a ceiling. That helped nearly 100,000 pensioners.
And the 12th BPS secured an additional ex gratia amount for over 700,000 pensioners across the board. AIBEA, UFBU, and other bank unions have systematically improved things for everyone.
Even tackling really difficult cases, like employees who had resigned.
Right. That was another group that fell through the cracks. The demand to give them a pension option was originally rejected by courts, but eventually, the unions managed to secure it through negotiation. It shows they're trying to cover all the bases.
So after all these decades, all these wins, what are the big fights now? The circular mentioned two key priorities.
Yes, the landscape today is shaped by the new pension scheme, or NPS, which applies to people who joined the banks from April 1, 2010 onwards.
Correct. And the major demand now is to scrap NPS for those employees and bring them under the old pension scheme, OPS, the one they fought so hard for back in 93.
Why go back to OPS? From the employee's perspective, what's the difference between NPS and OPS?
It really boils down to risk and guarantee. OPS is a defined benefit scheme.
You're guaranteed a pension based on your last salary linked to DA. The bank or government bears the investment risk.
NPS, on the other hand, is defined contribution. Your pension depends on market performance on the contributions made by you and your employer. The risk shifts largely to the retiree.
That's why OPS is seen as far superior from the employee side. But for the banks and government, OPS represents a much larger long-term financial liability. That's the crux of the fight.
The other priority is pension, which adjusts the pensions of past retirees to reflect current salaries of employees holding the same rank.
So bridging the gap between older pensions and newer pay scales.
Right. It's been a major demand in the 10th and 11th BPS talks. But AIBEA's circular is very clear. It hasn't been achieved as yet due to the potentially high cost involved.
So that fight is ongoing and is currently under litigation.
So the two big ones, pension updation and move NPS employees onto OPS.
And the circular also touched on the internal politics inherent in a long struggle of this nature.
AIBEA acknowledges there's a deliberate negative campaign in social media against the association and its leaders, calling some of it politically motivated.
That sounds familiar. Echoes of the resistance back in '93.
It does. But AIBEA's stated stance is to ignore the noise and focus on results.
They poignantly stated, "The caravan of AIBEA will march on."
Which kind of sums up the whole 80-year story, doesn't it? From that hire and fire, mercy of management era in the 40s.
Through decades of rejection, leveraging government changes, winning scheme CES, fixing the rollout, fighting court defeats.
To achieving massive quality of life jumps like the 10,000 rupees ex gratia and now tackling NPS and updation, it's relentless.
The real takeaway seems to be that securing social benefits isn't an event, it's a process. That 1993 victory was just the beginning of an ongoing process.
It's a constant cycle of work in progress, achievements, success, defeats, fall down 7 times, get up 8 times.
You pivot to new policies like NPS, then you fight to make it better. Then you fight to make sure everyone gets it fairly. Then you fight to keep it relevant, like a hamster on a wheel.
The multi-generational success of AIBEA and other unions to turn an idea like guaranteed pensions into a concrete, evolving reality for hundreds of thousands of retirees speaks to the leadership and courage of unions like AIBEA.
As I bow to the elders of India's banking for their resilience, I praise the unions for their achievements.
And if I had to summarize C.H. Venkatachalam's circular, I would, with apologies to the late Senator Edward Kennedy, say this. For all retirees whose welfare have been our concern, the work goes on, the cause endures, the hope still lives, and the fight for justice will never pause for breath.
That's a wrap. Thank you, listeners. Please comment, share, and subscribe.